All right, today we're going to do something a little different. We are jumping into a time machine. We're going to decode one of the most important shareholder letters Warren Buffett ever wrote and pull out 3 secrets that are, believe me, just as powerful today as they were back then. So let's get into it.
Okay, so our time machine has landed. The year is 1982. And let me tell you, the mood on the street is, well, it's grim. This isn't just some minor market dip. We're talking about a time of deep, deep economic anxiety. And honestly, it's the perfect backdrop for a masterclass in thinking clearly when everyone else is losing their minds. I mean, to put it mildly, the world is in a full-blown panic. The economy is stuck in this brutal recession. Unemployment is in the double digits. People are terrified of inflation. And on Wall Street, pessimism is pretty much the only thing on the menu. Just about everyone is running for the exits. But while the whole world was panicking, Buffett was just calmly watching. He saw all this chaos not as some existential threat, but as a market that was behaving, in his incredible words, like manic-depressive lemmings. And right there, in that gap between the world's fear and his focus, that's where our first secret begins. So, secret number 1 is all about learning to see what everybody else misses. It's about looking right past the official story companies are telling you and understanding the real, true, underlying reality of a business. Buffett basically calls this seeing through the accountant's illusion. Buffett makes such a sharp point here about human nature, doesn't he? It is so much easier to just change the way you measure success than it is to admit you're failing. He knew that the official earnings companies were reporting could just be a bullseye they drew after the arrow had already missed the target. To see things clearly, he focused on 2 completely different sets of books. You've got accounting earnings over here, that's the official number, the one that makes all the headlines. But Buffett, he looks over here at economic earnings, the actual cash a business is generating, especially the profits it keeps and reinvests, profits that often don't even show up on that official scorecard. And get this. In 1982, his personal share of these hidden, undistributed earnings was actually bigger than Berkshire's total reported profits. I mean, that's wild, right? And that's the whole point of economic earnings. It's not about what the accounting rules say, it's about real-world results. How good is a company at using its cash to make even more cash? So, the whole thing boils down to this incredibly powerful line from the letter itself. Accounting numbers are the beginning, not the end of business valuation. For a real investor, that headline number, it's never the final word. It's just the first clue on the trail. Okay, now let's see how this leads right into our second secret. And this brings us right back to those lemmings. See, secret number 2 is a total mental shift. It's about learning to see all that market chaos not as a risk you should be afraid of, but as a powerful ally you can use. Buffett's warning here is just crystal clear. The market gives you these incredible opportunities, but only if you've actually done the work. If you're just blindly following the crowd, being one of the lemmings, it will punish you. No mercy. And this just lays out the core idea so perfectly. Think about the market's mood. It's emotional. It's short-sighted. It swings from euphoria to despair in a heartbeat. But the actual value of a great business, that's rational. It's long-term. It's based on solid fundamental economics. The secret is learning to separate the two. When the manic-depressive market is panicking, like it was in 1982, it starts offering up these wonderful businesses at bargain bin prices. Suddenly, all that chaos, it becomes your single greatest advantage. Okay, but knowing what to buy is really only half the battle. The third, and maybe the most profound secret from 1982 is all about what you don't do. It's about the incredible overlooked power of just saying no. Buffett pulls out this quote from the philosopher Pascal to make a timeless point. So many of our biggest mistakes come from the fact that we just can't sit still and do nothing. We feel this constant pressure to act, right? To make a deal, to chase whatever the next big thing is. And here is the proof. Buffett says his single biggest achievement for the entire year wasn't some brilliant stock pick. It was a huge acquisition that totally fell apart at the last minute. His biggest win was avoiding a bad deal. He saw other CEOs getting totally swept up in what he called managerial adrenaline. It's that thrill of the chase, that ego-driven desire to build a bigger empire no matter the cost. It was literally blinding them to the value they were destroying. Their brain just couldn't compete with the rush. And this slide right here, this is the intellectual heart of the entire letter.
To fight that adrenaline rush, he gave us this simple but absolutely revolutionary reframe. Don't just say, Company A acquires Company B. Force yourself to say the more honest truth. Part of Company A is sold to acquire Company B. That little switch in language forces you to ask the real question. Am I really willing to sell a piece of my wonderful business to buy this new thing? And all of a sudden, the true cost becomes crystal clear.
So after our trip back to 1982 and digging up these secrets, what's the one timeless lesson we can actually use today? Well, it all boils down to a simple, golden rule for value. First, know the true value of what you are giving up, whether it's cash or part of your company. Second, be brutally honest with yourself. Are you getting at least as much real, intrinsic business value back in return? And third, and this is the hardest one of all, if the math doesn't work, have the discipline and the courage to do absolutely nothing. Walk away. Which really just leaves us with one final challenging question. We live in a world that celebrates constant action, right? A world that rewards the thrill of the chase. But the lesson from 1982 is that sometimes the smartest, most profitable, and even the bravest action is no action at all. So do you have the courage to just stay quietly in the room?